How do you keep shining above the rest? Not only ordinary times, but also at extraordinary times as well. Let me tell you why Softlogic life is so special and how do we keep shining above the rest. Good afternoon, ladies and gentlemen. Today, my objective is to share with you value creation story of Softlogic life and how we perform as well as how we will be performing in the future. This is my outline today. I start from dig deep on business model and talk about key value propositions as well as how we are making money. Then move on to the performance as well as industry prospects, move into the future forecast, and finally recap. This team organization established 24 years ago in 1999. Currently, Softlogic Life is owned by 51% Softlogic Capital PLC and 38% owned by Leapfrog Investments, who manage over $2 billion investment fund around the globe, and 10% of shares owned by public. Apart from ordinary equity capital, our capital position includes Tier 2 capital, who provided $15 million Norwegian as well as Finland government development funds. Today, I am proud to mention that Softlogic Life is the second largest insurer in Sri Lanka, surpassing many long-standing multinationals as well as government insurer in Sri Lanka within short span of 23 years. That is record in Sri Lankan insurance industry. That fact itself provides great potentials to this tiny insurance company. If we move on, last 10 years, we have been growing in revenue 28%, which is more than double the industry average growth of 14%. Also, if we compare this performance with the economic growth, economy was growing at 3%, which shows that more than 9 times we were able to grow. Growth in revenue is good. Recording profitability while growing revenue is fantastic. But achieving sustainable growth in revenue as well as profitability is phenomenal. That's what simply Softlogic Life has done. As you can see, last 5 years, we have been able to grow. We have been able to record ROE of about 26%, while we had a target of recording more than 20%. If we compare this with the market ROE, which is more than the double, last 5 years, CAC market ROE is 11%. And if we compare this with the 5-year treasury bond yield of last 5 years, again, this is double in return, which shows that we have been able to deliver more than the above market average returns. Why I choose last 5 years? Somebody can ask. Because last 5 years consist with most troubled 4 years in Sri Lankan economy. It started with 2019. 2019, everyone knows that we had the Easter Sunday attack. Then coming to 2020 and 21, it's 2 years under COVID. We had lockdowns in many situations. And coming to 2022, we had a full-blown social as well as economic recession. Reporting more than double the revenue growth while delivering more than double the market profitability is all about indication of sustainability of this business model while this challenging business time. Moving on. How we can shine above the rest? What is the secret mantra behind this? It's all about key value drivers. As I mentioned that, last 10 years, we have been growing 28%, again, market average of 14%. This sustainable growth above the market average resulted increase in market ranking by 4 positions within last 5 years. As my managing director mentioned, we were 5th largest insurer in year 2018. While 2019, we are having Easter Sunday attack, we were only focused on business, nothing else. That's why we were able to increase our market portion to become 4th largest insurer by dislodging one of the insurer in local conglomerate market. Nothing else. Followed by 2020, while countries fighting with COVID-19, we were able to increase our market portion to become 3rd largest insurer by dislodging Asia's largest insurer in 2020. We didn't stop. While we are fighting with economic recession, last year, we became 2nd largest insurer by overtaking 60-year-old government insurer. And that's, again, remarkable achievement. Achieving 4 marketplaces increase is another record in Sri Lankan insurance market in Sri Lanka. This market growth resulted increase in market share. If you compare last 5 years, we were able to increase our market share by 6%. If we compare this market share increment with rest of the top 5 players, you can see that all top 5 players lost their market share from 1% to 3%. Again, this is very significant achievement if you compare with the top 5 players. Moving on. To achieve the sustainable growth, key value drivers plays major role. As you can see, Softlogic Life really believe we are in the business of protection. We are not in the investment market, where investment products are considered. Whatever the premium collected during the period, it has to be refunded end of the policy period. We are not in that business. We are fully focused on protection business. That's why out of portfolio, 72% of premiums are protection oriented and only investment contribute 28%. How we drive this protection oriented? When it's come to the agency channel, we are having endowment product which is delivering more than 51% from rider premiums, which is purely protection. If we compare this one with the Asian region average, which is more than 5 times. Also, as per the Asian rider survey done by Milliman Consultants, in Asia, more than 50% of rider attachments are having less than 1% of insurance in Asia. I am proud to mention that this team, Softlogic Life, today belongs to Asia's less than 1% of insurers. Also, this study further revealed that if any life insurance are having more rider premiums, which will result higher profit margins as well as higher business valuations. Coming back to key value drivers, we are really focused on average policy value of the customer because we are very clear which market to be in. That's why our average policy value comes to 169,000 if we compare this with the market average, which is more than 3 times. Because of clear market segmentations with right product, resulting higher policy retention. As you can see, our first year retention is 84% if we compare this market average of 60%, which is significantly higher than the market average. While we are second largest insurer in Sri Lanka, today I am proud to announce that we are the largest market shareholder of health market. Sri Lankan health insurance market, roughly around 28 billion. Softlogic Life is having 9 billion, where we account 33% of market share in health insurance space. This is another key unique feature in our value proposition. So far, we have been discussed how we have retained our sustainable growth in revenue, how we have been delivering sustainable return on equity to our shareholder. Now I am going to talk about how strong our other value unique propositions. These are the value propositions. Currently, we are the life insurer who holds highest number of customer base, which is over 1.3 million customers. And today, we believe that is our DNA. We are the most innovative insurer in Sri Lanka. Not only for insurer in Sri Lanka, our innovative mindset recognized in Asia's Insurance Review as most innovative insurer in Asia. As my managing director mentioned, we take claim as very serious commitment, not as a duty, because any product has to be win-win situation to customer as well as company. We don't have any hesitation to pay our claims as soon as possible. That's why sometime back, we established a benchmark to pay our claims, more than 80% of claims within single day. I'm proud to mention that 2022, we were able to pay more than 90% of our claims within single day. That shows our commitment to our claim payment. Not only that, we wanted to further improve our claim settlements. That's why we further introduced automated claim assessment system, we call it Claim It, which is AI-based claim settlement method, fully automated from claim submissions to claim payment, which is happening in less than 1 minute. I'm proud to mention this is an innovation internal team has done, which shows our internal intellectual capabilities of our IT team. We take digitalization as very serious issue. That's why our sales platform is fully digitalized. From submission of proposal forms to settlement of basically issuing the policy document, 100% digitized process we have. One of the key success factors of Softlogic Life is that having right product to right market segment. If somebody asks why we are growing, that's one of the key success factors. We have products to address highest richest person to poorest person, because we really believe inclusivity as well as elimination of poverty as one of part of our corporate responsibility in our business community. Nothing is impossible when we have young but passionate management team. I can proudly mention that we have very capable and extraordinary, most energetic team in this industry. That's why we have been able to grow sustainable revenue growth as well as profitability growth. That's a key differentiator in our business model. Every possible initiative driven by this management team. Moving on. We strongly believe there is no business if you don't have a strong governance framework. That's why we always focus on going beyond minimum regulatory requirement on governance and transparency. We are the only insurer in Sri Lanka who does external audit in every quarter, external actuary evaluation in every quarter, because we want to ensure highest level of governance as well as transparency. And when we are publicizing our quarterly financial statements, we don't wait till due date comes. If you come to last year, we are the first to publish our quarterly financial statements. And our continuous commitment in governance as well as transparency has been recognized at many award ceremonies. If you come to the last year, our annual report won overall silver award across all the industries at CA Tax Awards in last year. Not only that, Recently, LMG ranked Softlogic Life as third most awarded company in Sri Lanka, which shows that not only for governance and transparency, every angle we have been recognized in Sri Lanka as well as Asia, which shows how transparent, how governance in our governance angle we discuss. How we are making profitability? Apart from my discuss about value creation story, there are some significant contribution we focus. Last 23 years, we have been collecting underwriting capabilities and digital platforms, as well as we have been collecting health insurance data. Because why I'm telling that? We are the first insurer in Sri Lanka who introduced health insurance proposition along with the life insurance product. That enabled us to collect data experience in health, which resulted right pricing, right underwriting, and paying the right amount to customer. This data further signified and proven that if we compare last year, out of our portfolio, we reprice only less than 1%, which shows that how efficiently we use our data. We strongly feel high medical inflation as well as aging population provide great growth opportunity for our business model. I will explain in my later part of my business presentation. Last year, unprecedented times we had it. We had an inflation of 80% and sudden increase of taxation. Almost all the prices went up and disposable income drastically dropped down. Everyone is talking about impact to their business model. Yes, we also looked at. However, if you look at 2022 performance, again, we were able to record more than the above average market returns. What is the secret behind that? It's all about, I mentioned that our agency channel, which contribute 67% of our revenue, we are very clearly focused on market strategy. We are focusing middle to higher market segmentation. As a result of that, our average policy value is 169,000. What it means? Our product caters value in use. When somebody is paying the premium, the policyholder can enjoy the benefits of that policy because we inbuilt health as well as other protection-oriented features to our products rather than somebody gets after their death. And if we come to 2023, because that is first year we experience new taxation impact. While experiencing higher inflation, while experiencing drastic drop in the disposable income, I'm proud to mention that we were able to record another record in the insurance industry. Our agency team recorded over 1 billion new business during month of January. That is again record in life insurance market in Sri Lanka, which shows that what is happening in the economy, we were able to navigate and manage and overcome. Not only that, existing policyholders, they keep on paying their premiums because they value what is the benefit, value in use, they are getting it. And we were able to maintain our policy retention rates despite high inflation, despite drop in the disposable income in the market. Having discussed value creation story, key value propositions, now I'm going to discuss our performance. Moving to last 3 years performance, as you can see, gross written premium increased from 15.6 billion to 23 billion, which is from 2020 to 2022, which is about 23% growth, and this is again more than the industry average growth of 15%. Profit before tax increased from 2.1 billion to 4 billion, and profit after tax increased from 1.5 billion to 2.7 billion. When it's come to the financial position, out of 48 billion investment assets, financial investments consist of 89%, whereas other assets only contribute 11%. Moving to key value drivers and ratios, this is very important thing. Industry-specific ratios, market share increased from 15.2% to 16.9%. Earlier I mentioned that market portion increased from third largest insurer to second largest insurer. Point to mention that 2022, we had a significant inflation of 80%. Almost all the commodity prices went up. However, despite that, we were able to improve our operating expense ratios from 19.5% to 19.2%. Point to note that insurance ability to pay in the claims depend on how well capitalized. Today, Softlogic Life capital adequacy ratio is 287%. What it means? Minimum capital ratio is 120%. That means we have more than 2 times of requirement of capital in our balance sheet, which provide strong cushion to our future growth as well as claim paying ability. Coming back to key value drivers, starting from annualized new business premium of endowment, increased from 3.8 billion to 5.8 billion. Since we are focusing right market segment, we were able to increase our average policy value from 136,000 to 169,000. And I mentioned earlier, one of the key driver of profitability is that ride attachment. We were able to increase our ride attachment from 42% to 51% by 2022. And despite high inflation situation and increase in taxation, both indirect tax as well as direct tax, we were able to retain our retention ratios 84% and 66%, which is significantly higher than the market average of 60% in the first year. Since this is investor forum, I think you would like to hear investor ratios. Starting from return on equity, I am very happy to mention that 2022 is a year that we recorded highest operating return on equity of 26%. And when it comes to dividend, we have very clearly outlined dividend policy. That is, out of the profits, we have 50% we distribute as dividend on annually. Keeping that promise, last year we distribute 3 rupees and 50 cents. And currently, reported EPS is 7 rupees and 280 cents. 2022 year, with our prudence basis, we have provided prudent impairment as one of impairment. If we exclude that, our regular earning per share increased to 12 rupees and 11 cents. Something I think we should remember. Coming back to investment portfolio. As you can see, out of the investment mix, largest mix is treasury bonds, that is 32%. You might wonder why, compared with 2021, why there is a significant increase in treasury bond portfolio. It's all about risk management. We anticipated rate increase in 2022. We kept our investment on short to lock it at right time. We were able to lock our treasury bonds more than 29% yield. Followed by, we have the corporate deposits as well as corporate debt, 28%. Point to note is that if we evaluate credit risk of the investment portfolio, triple C category hold less than 1%. I would say 0.5%, which shows that while we try to optimize our return, we conscious about risk as well. No business can grow without having prospects. Let's look at industry prospects. As you all are aware, life insurance industry in Sri Lanka is well under-penetrated market. Sri Lankan insurance penetration, that's mean life insurance premium as a percentage to GDP, still considered as very low, that is 0.6%. If we compare this with the regional peers, that is roughly around 2%, which shows that we have more than 3 times of growth opportunities there. Coming back, aging populations. Population over 60 years. At presently, 16.3%. However, as a prediction, that is increasing faster. Increase in aging population means demand for medical insurance is getting up. Demand for protection is getting up, which shows great opportunity for company like us. When industry is growing, we have been able to grow more than the industry growth, more than double the industry growth. So which means that future growth, we can capture more than what it sees here. This is the benefit of COVID. As per the survey, which shows that there is high demand for life as well as health insurance market. More than 56% of positively responded for life and health insurance products. Before COVID situation happened, this situation was completely other way around. As you are aware, nobody interested about life insurance products. Now situation has drastically changed. This is very positive for life insurance market. SLFRS 17, insurance contract. At presently, life insurance market account on IFRS 4, SLFRS 4, which says that you continue your current practices as it is. Whatever you do, you continue. Method followed by Softlogic Life might differ from your competition. Having realized this requirement, global accounting firm came with a comprehensive accounting standard. We call it insurance contract. This will be effective from 1st January 2025. So, having evaluated what is the benefit of this one, these are the benefits. Initially, I mentioned that we are in the business of protection. We are not in the business of deposits or investments. At presently, any company issuing investment product, total premium considered as a revenue despite what is the percentage of protection element which has. Since our protection business portfolio is 72%, we strongly believe with the introduction of new accounting standards, protection-oriented revenue is higher, and even today, we strongly believe we are the market leader in protection business. So, which will show who is in the real life insurance market. Moving on. Since we have been growing 28%, which is more than double the insurance industry growth, one of the key expense we incur is that acquisition cost. We have to pay commission and incentive substantial amount to acquire new customer. That's the inherent model in the insurance market. Since we have been growing faster, this acquisition cost incur in the first year or first 3 years become burden to the income statement, because under current accounting regime, this cannot be deferred. However, having understood this shortcoming, new accounting standard provides space to defer this cost because cost incurred in this first year relating to the future value of the business. That ROE I mentioned earlier, last 5 years is, I mentioned that 26%, having taken hit from this initial acquisition cost. I can tell you, if you had the option to defer the acquisition cost, our ROE would have been significantly higher than what it was reported. So this is another benefit. Final one is that, I think everyone is aware, Sri Lanka is a market. Within 1 year, our interest rate swings drastically. Last year, it swings more than 1,800 basis, and this year it will be swinging other way around. Since the life insurance liability is a long-term nature, one of the key input taken to value the life insurance liability is that interest rates. Drastic change in the interest rates might change the profitability of the business drastically. However, short-term nature of the interest rate might not reflect true value of the business because we have the long-term business. If somebody wants to evaluate what is the core profitability of the business, we need to eliminate impact from the interest rate and see the profit and loss. Unfortunately, current accounting regime doesn't provide space to this. So therefore, one of the benefits in the new accounting standard that interest rate mismatches allow to recognize other comprehensive income that's been apart from main P&L. Those are the benefits we feel Softlogic Life is having with the implementation of IFRS 17. What are the challenges? So these challenges, not only for Softlogic Life, for everyone across the industry, across the globe. Obviously, to develop this IFRS 17 accounting standard, it took more than 25 years, which shows how complicated that standard is. Because of the complication, it is very difficult to understand and very difficult to find the resources to implement. Therefore, it is require additional investment. Those are challenges. Having discussed prospects of the industry, so let's see what is the prospect of Softlogic Life now. Moving to the revenue. Softlogic Life expected to grow next 3 years, revenue of 23%, which is more than the industry average growth of 18%. While if you take the next 3 years, according to the IMF predictions, average growth of economy is 0.3% on average. Moving on. If we come to the new business generation perspective, so endowment product expected to grow from 5.9 billion to 10.5 billion next 3 years. Why I am depicted here? Because endowment business is the one agency channel drives, which is accounting 67% of our portfolio in revenue. And out of this new business, it is expected that rider attachment ratio to maintain at 51%, which provide the profitability of our business. These are next 3 years forecasts. I mentioned that we expect that GWP to increase from 23 billion to 42 billion by 2025. Market share to increase from 16.9% to 18.4%. Whether we have IFRS 17 or not, we expect that market leadership by 2025. And most importantly, we want to maintain about 20% of ROE. That is the target we have. And by 2025, based on the forecast, we expect to maintain around 25% of ROE. Point to note that while we maintain 19.2% expenses in 2022, you can see that 2023 expense ratio is going up slightly to 19.9%. Understandably, because of high inflation, there are some benefits to be provided to staff to accommodate the current taxations, as well as general inflation also increase supply cost. While allowing that, our increase in the expense ratio 0.7%. However, with the increase in the business volume, we wanted to increase our operating expense ratio from 19.9% to 16.9%, which directly translates as a profitability element to our ROE. Coming back to key value drivers, one of the key focus we have is that given the market segmentation, to increase our average policy value from 169,000 to 195,000. However, we wanted to maintain our first year retention at high level of 85%, which is again significantly higher than industry average. As I mentioned earlier, we wanted to maintain right attachment ratio of 51%. We don't want to compromise that because that's a driver for profitability. Behind the recap. So, Softlogic Life, we are in the life and health market. I think more than the life and health market, I would like to mention that we are in the business of protection, not about deposit or investment market. This company, run by most energetic team in the industry, and we have very strong governance structure. Our focus to not only about minimum regulatory requirements. Our bar is set way above that. We wanted to go beyond that. When it comes to sustainable competitive advantage, we have the customer-centric innovation mindset and diverse product portfolio to address different market segmentation in the country. More importantly, we have more diversified distribution model to address different market segments. Our focus is to provide superior customer service. Coming back to how strong our balance sheet, we have a strong capital adequacy ratio of 287%, which is more than double the requirement of 420%, that is the minimum requirement of regulator stipulated. Coming back to profitability, last 5 years, we have been able to deliver more than 26% of ROE, and we expect to deliver more than 24% ROE in the next 3 years. If we evaluate last 10 years performance, we have been able to record more than double the industry growth, as well as improve our key value drivers that resulted profitability, as you saw. So we cannot grow without industries growing. Life insurance industry is very attractive, full of opportunities, which is still under-penetrated market, as well as aging population keep on rising. Future prospects. GWP growth, we expect to record 23% and ROE of 24%, though we have the target of 20%. As I said, life insurance industry is full of opportunities. We have proved that we have a strong balance sheet backed by innovative business model. More importantly, run by most energetic and passionate management team. Be the times are ordinary or extraordinary, we will remain shining above the rest. Thank you.